What is the stock market? You hear about the stock market all the time. On the news, in a newspaper, and even on cities and streets. But what is the stock market? The stock market is a huge market that is a large part of the economy. If the stock market is high up, then so is the economy. If not, then so is the economy. But unlike most markets, a stock market is a virtual market. Also, unlike most markets, the stock market is a market where companies sell stocks to investors, mainly individuals. A stock is a part of a company. So basically, when investors buy stocks, they buy parts of a company. Think of it as a pie. The company owns the pie and investors seeking for a profit buy a slice of the pie. When the company sells more and more pies and gains profit, so does the investors. However, when the company loses money or goes into debt, then the investors also go into debt. The stock market is a little more complicated, however. The price of stocks depends on, you guessed it, supply and demand. If demand increases, and supply decreases, stocks get more expensive and vice versa. Companies set up stocks to earn more money and gain higher profit. Investors buy stocks to earn a small profit as well. When the stock market goes down, or starts to crash, then the value of stocks also goes down. When the value of a stock decreases, investors go into debt and share the loss of the company. Smart investors realize the company's failure and quickly sell the stock to gain a profit. Sadly, this gets harder as time goes on because investors realize the company's failure and choose not to buy the stock from the previous stock owner because they don't want to risk it. This is a bit confusing, so let's have an example before we wrap up. Debbie is a 24-year-old businesswoman who wants to earn some money so she can buy a house. After all, her apartment is very noisy. So Debbie starts a company called Debbie's Donuts and signs up for the farmer's market. She sells with the catchphrase, made from homegrown ingredients. She even got verified from the FDA, or Food and Drug Administration. After a while, she made quite a bit of profit, but only enough for a large garden. Debbie created an online place to apply for a job at Debbie's Donuts and invested to buy a small shop in a busy metropolitan street. Her sales increased, but she didn't have any more money and supply decreased. Therefore, demand increased. And since she didn't have enough to fulfill the demand, her business started to crash. She went into debt so she could keep it running. Debbie was scrolling on the news and saw a report on the stock market increasing. She got interested and researched about the stock market. After she understood enough, she put her stocks out on the stock market. She had a loyal customer and he bought the first stock. It cost only 20 cents. He publicized their amazing and highly beneficial. Investors immediately saw potential and bought their stocks. Their stock market was gaining value quick.
Customer complaints led to investors selling their stocks. The stocks lost value and her business stocks crashed. She went in debt and her business was closed for repairments for a whole month. Other than being sad, this example illustrates how risky stocks can be. It also gives a basic understanding of the stock market. That's all for today. Like and subscribe for more amazing content like this.